Hey everyone, Blockchain Bernie here with my latest video. This is about my personal take on where we are with crypto winter. Is crypto winter already behind us? Is the worst behind us? Is it going upwards from here on? How long will it take? And, just my personal opinion and my personal analysis of the situation that we're in at this point in time, late April 2023. So if you like content like this, please like my video, subscribe to my channel. I really, really appreciate it, and thank you. All right, so how about the crypto winter? I mean, that definitely we're in a bad crypto winter, right? And we're looking at altcoins, we're looking at Bitcoin. Bitcoin has, just recently almost rallied a little bit, right? And if we look at all the altcoins, the one that can actually do things, right? Like Bitcoin, Dogecoin, Litecoin, they cannot do much. They are just passive money. And with Ethereum, we had code running on the blockchain, right? So with this code running on the blockchain, this is almost trading like a tech stock or something, because it's a piece of software in the end. It's a piece of software, a platform that can run software that's running on those L1s blockchains and things like that, right? So it's trading like tech stocks, right? And it's trading like tech stocks whose real value is many, many years in the future, right? So there's tech stocks that are already profitable and they are giving their real value right now or in the near future. But the ones that still have a lot of growth ahead of them in the coming 5 to 10 years or something, they have been hit hard by this interest rate climate that we're living through right now, right? So with all the rate hikes that we saw by the Fed, these tech stocks, especially the ones whose best days are supposed to be 5 to 10 years from now, and most of the crypto projects, let's face it, we're not there yet. There is no widespread Web3, right? There is not a single cryptocurrency that's being used by billions of users each and every day, right? And that is the goal. And that's what we are working on with the Bitoku chain, because we're doing the next step. After having added the executability of smart contracts, right, with Ethereum in 2015, now we're adding the missing storage layer. Because with all Web 2 apps, right, there is like we can execute code on Web 2 servers, but we also have storage on Web 2 servers. On all these chains like Ethereum, Solana, Avalanche, and the L2s, there is no genuine storage layer, right? No fast random access storage layer that is just needed to write real applications, right? So if we want Web3 to be real and touch billions of people and being used all over the place, we need that storage layer. And I couldn't be more excited working on this project, this problem, and solving this problem for humanity than this problem that I'm working on. So I'm super excited. If you want to learn more about Bitoku, the link is in the description, bitoku.io. Read our light paper, which is on the bitoku.io website, and you can be part of it very, very early on by running a validator and by purchasing a validator license. It's all described in the light paper. It's a great thing to do. So with that said, if we think about all these things that have the value in the future, many years from now, they have been hit by the interest rate hikes, right? Because valuation works like DCF. It's called discounted cash flow method. So all the profits that are going to be coming in the future, they need to be discounted by some discount rate to today's value, right? And the discount rate is now higher because interest rates are higher, right? And the discount rate is kind of the safe interest rate, right? That's what the Fed is doing, right? The interest rates for like T-bills and stuff like that, those are considered safe investments, right? Because it's quite unlikely that the US government will not fulfill their obligations, even though we never know what's going on right now in politics, but it's considered a safe investment. And then on top of that, we add the risk factor, right? So the higher the risk of these projects, and typically, if projects will really prosper 5 to 10 years from now, in the meantime, a lot can go wrong, right? So the risk tends to be higher with these things. And with the higher interest rates, we're now in a risk-off environment. So people don't like risk that much just because the risk comes on top of the higher interest rate. So it gives an even higher interest rate and it discounts it down more. So that's the reason so many tech stocks and so much crypto, and especially the ones that are blockchain based, that are mostly traded like a tech company, they have been hit so hard. And what needs to happen to get out of this slump? It is basically a changing environment for interest rates. And that decision, everyone has to make that for themselves. Like, are we going to get way higher interest rates for longer than anyone expects or not, right? And what's happening right now, since, a few months ago, the market thinks, and we see that with the longer term interest rates that are being formed by supply and demand, right? So like 1-year contracts, 5-year, 10-year interest rates, those are not, just dictated by the Fed, but they are they form themselves by supply and demand, by, market participants trying to figure out what might short-term interest rates be next year, 2 years from now, 5 years from now, right? And by these expectations, these longer term interest rates are forming, right? And what we're seeing, and already for at least 6 months now or something, people feel that, there might be one, even none, or maybe two more little hikes, and then it stays for a few months, and then by the end of the year, and to the latest early next year, interest rates will go down again, right? That's what the market thinks. So people are betting their money, right? And this is like billions, trillions of dollars. People are betting money that interest rates will go down within 6 to 12 months, right? And that is in sharp contrast with what the Fed thinks, right? The Fed thinks they need to stay up way longer, and they do everything market driven, and only when prices go down or inflation is back to the 2% target, then they might decrease interest rates again. Right? I personally think the market expects these interest rates to go down. Inflation rates are already coming down. That doesn't mean prices are coming down. It just means the rate of growth is coming down, right? They could come up again, if there's like what we all cannot predict is like global events, black swan events, or stuff like that, right? If something happens and World War III breaks out and stuff like that, nobody knows what's going to happen, right? But let's say nothing of that real bad stuff happens, and there's no new pandemic or any unforeseen global scale event, then I think I would trust the market more than what the Fed thinks, because the Fed cannot think about that. If the Fed thinks like it's all going to go down again and job is done and stuff like that, then everyone thinks like, oh, okay, it's all good. And then things go out of control again, right? And that history has shown that, right? So the Fed needs to be very, very careful in their communications in order not to, put oil in the fire of inflation just by their words, right? But the market expects this, right? If the market expects this, everyone's delaying their decisions, right? So people are not buying homes right now because they expect mortgage rates to be lower a year from now, right? So they delay it. And the same is true for buying cars and stuff like that. And we see prices of new cars coming down, prices of used cars coming down, right? And that all means when people are delaying things, then, there is not so much demand right now. There's not so much demand right now, but the supply is there. The producers will have to decrease their prices so that they sell all that stuff, even though we have high interest rates right now, right? So this whole thing becomes a self-fulfilling prophecy, right? Everyone now expects that, a year from now, interest rates will be lower, and everyone's delaying those decisions. I'm delaying my solar panels, right? Why would I buy friggin' solar panels right now at like 7.5% interest rate, right? Let me do it next year, right? So that's how it works. And I think it's going to be a self-fulfilling prophecy. So nothing is predictable, of course, and there can always be other events, but I think interest rates will start going down due to price pressure, deflationary pressures that we're going to see and are already seeing in some parts of the economy, not in all parts of the economy, but we see it in some parts of the economy. And my personal guess is we will see it in many parts of the economy real soon. And, when that happens, interest rates go down again, then slowly but surely the risk on will come back, right? And people will like these things that are growing, right? Because that's where it makes sense of investing, right? What you buy when you buy a stock or what you buy when you buy crypto, you buy the future of that thing. You don't buy the past. You don't buy the present. You buy the future of it, right? Only if, in the future things will grow and are higher than expected, then you'll make a profit with your investment, right? So that's why it makes a lot of sense to invest into things that have high growth, right? So this will come back when the interest rates are coming back. So I expect the next bull run for crypto to start within the next 12 months, most probably within the next 6 months. That's why I'm invested a lot into crypto, and I'm invested a lot into tech stocks and things like that. And that's my personal take. And of course, nobody knows, and I don't know. This is not investment advice. Always do your own research. It's just for pure entertainment purposes, and just to let you know what my opinion is on these things. So don't forget to like this video. I appreciate it. Thank you very much. And thanks for watching, and catch you guys later. Bye.